The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman.
Our host, Basil Chapman, Tiger Technicians Hour. My pleasure to be here Monday, Tuesday, Wednesday, Thursday, and Friday, 11 o'clock until noon Eastern Time. And today being first snow we've had in quite a while. It is Wednesday, the 16th of January. The day I remember well because two things happened. One is that I had a nephew born on this day. And the other is, this is the day, I'm almost sure about it, that in 1991, when was the Iraq invasion? When was that? Well, there was this huge move to the upside in the market. Opened up hundreds of points higher. I could probably find it right here. So, 16th of January, that's what it is. The year has begun. I remember last year when we got to late January, early February, I said the year has just begun and soon we'll be saying it's just about to end. Man, the years go by quickly. I guess as you get older, they go by quicker. Now, I had a couple of questions. I'm going to deal with the very first question. I'm going to run the numbers, and I'm going to deal with the question because I think it's a question many of us are asking. And the question in the den here is, let's see. Morning, Basil. Is there anything in your work telling you which direction the next S&P 40-point move is coming? Thanks. And I answered 180 to 220 points, yes. 400, not yet, Z. I'm going to go through that. Let's get the numbers out the way. After everything we've seen, after the massive move up on January the 2nd, you would expect that two things would be happening. One is that there'd be a consolidation with a close, not just intraday, but a close sharply lower. And at some point, but instead what we get is this phenomenon that I call the ChapmanWave stalk leg formation. It's a physical pattern, but it is a mental pattern. We've seen it for years and years. We've seen it. I've seen it for decades, but some of you have only seen it for years. And what happens is there's a moment where the market makes a turn to the upside. And it is so persistent that buying is there. Just the buyers come in every time the market pulls back. You only get intraday corrections. And yet, everything about it says, it should get a pullback. And then some of the stocks like a Ford, you try to get in and they just every day they go higher. And when they do pull back, it's just an intraday pullback. And if you didn't step up to the plate, you turn around, you look and you say, good grief, I could have bought at the high, at the close, every single day, and I would have been making money. Then at a certain point, it just gives it up. But it gives it up in a very special way. It makes that oval formation. And then it continues higher. Breaks above the body, or what I call the body of the stalk. Well, we saw that perfectly in the 120-minute chart. Here it is. There's the leg. If you're looking at Tiger TV, Dow 120-minute, huge leg up. Now, I do call it a leg in this case, but a leg when I'm talking about this phenomenon, this intense buyer modality, it could have a number of peaks all the way up. It could just keep going up, but the whole thing represents. If you were thinking, say, Elliott wave or something, this is like that, like the third wave that is always just so big. It just keeps going. So what happens is it gets to a certain point and then it stops, but it doesn't break down. All it does is merely makes an oval formation that breaks out to the top side. Neck, and we just got the head pattern. And in fact, it's fulfilled all its requirements. Now it's a slightly different formation. But look at the volatility index at 13.30. The trend is barely acknowledging anything. It's neutral at 0.96. The Dow is making a peak B if there's no new recovery high today above 13,546.37. Although I must say, with Boeing down so sharply, this is really impressive. The Dow's only down 33 points at 13,501 after being down quite a bit earlier and much more yesterday. Then what we're looking at is the S&P is down at $1.87 at 1470. It needs 1475. And then my monthly chart says we are in leg C. We are going higher. That will answer the first part of the question that was asked in the den about the S&P next 40 points. However, what I'm also looking at here is something that is this to me is really important. When I look at the Qs up 5 at 31.15. Apple is up 15. It was up 15. What is it up now? 16 at 502. I think in some ways that the Apple selling is, I wouldn't say it's done, but I would say that the Apple selling is showing, told me that it has reached a certain, I spoke about this yesterday, it's reached a certain level where I think it is overdone, and that there should be some kind of a counter trend bounce. That's going to help the Qs. So that's there. And now we're going to have a look at the gold. And gold it was down a little bit. It's down 4 at 16.79. I keep saying that I just don't see much in gold. I think gold is in a bear market. That's the way it is. I know there are reports out that people are looking at upside. I can see upside rallies, but I think lower lows and lower highs in the monthly is what I'm looking at. Silver is up, down 11 cents to 31.41. Now, copper is at down another 1 at 3.61. This is a heads up. They've got to just watch this real closely. And bonds are up 3 at 146.02. Now, what I said is, I'll explain what I'm looking at here. First of all, there's a rectangle formation. Can you believe from that big breakout on the 2nd of January, the E-minis had a gap up from the 31st to the 1st. It has not filled, even come close to filling the gap low of 1438.25. This is the March S&P E-mini. I've typed in, and I typed this in ages ago. I just made it much bigger. Rectangles can last a long time. Look at the rectangle formation in the E-mini. First of all, that's the gap. That gray, if you're looking at the gray, that's the gap between 1425.75, the high of the 31st, and the second, the low was 1438. 25. That's a 10. Yeah, that's big. That's a 10-point gap. Well, look at the other gray area. This has held in a trading range between 1446 and about 1463, with a one quick spike to 1471.50, and it's now making a high-level consolidation. 1456.50 is what you have to watch. But if there is a move above 1467.50 on the E-mini, that starts leg B up. I believe I've got that right. It's a little squash. That's B up. Now look at the NQH. This is a 120-minute rectangle there. It's a much wider one, but it's the same thing. The gap's not been filled. It's been in this trading range between 27.47 to 27. What was the lows? Let me just get the low right here. 27.14. And it is in leg B up. This is the NQ is in leg B up. And that says it could go towards the upper range of this rectangle formation. So now, that whole thing is a preamble to this chart here. Do I want to use the white one? I think it's going to show up a little better on the black chart. If you don't mind, I'm just going to switch over to the black chart. There it is. The black chart. And this is not the one that I wanted. Black chart. Let me just quickly see if I can get another one. This is the one I wanted, right? I believe this is the one. Exactly. That's the one I wanted. And what you can see is that that on the upside, I'm looking at a pattern that says the whole area going into the 1520 to the 1570s, that is going to be an area of, it should be, an area of huge resistance. Ken in the Den said, Basil, that's how the market makers ring out the premium options. Yep, exactly right, Ken, absolutely. Oh, and Ken, you had a question for me at the close yesterday. I did IMU. I don't think you saw it, and now I can't remember what the stock was, but in a webinar that was given last night by the Warden brothers, lo and behold, one of the charts that this lady was talking about turned out to be that exact one, OCE. I can't remember what it is. If you want to put it into the den, it's a very interesting chart, and I'll look at it later. So So here we are. We've got the S&P. There's the range that I'm looking at, that whole range. And as I said, all it needs to do is to break about 1474.51 by 1 penny. And I have no choice but to call that not G. Yes, you do occasionally get a G, but they're usually at major highs. I suspect that I have no choice but to call it peak C, and that is really bullish on the S&P. But it's really bullish for about another 78. So about another 80 to 100 points on the S&P if everything works out, because this is absolutely, there's no denying it. I'm waving my hands. There's no denying this is an up channel. It's in the upper range of the up channel. It's in the upper range of the inside dash line, inside track. And that is very important. So January is halfway through. We've got the whole month to go before we know if this is going to reverse and come down sharply. We've got there was the fiscal cliff, and now who knows what they're going to add. So that's really what I'm looking at. And I believe that the next 100 points. Now, let me just explain what I'm looking at here. So I'm going to go back to the white charts. I'm getting rid of this. I'm getting rid of that. And I'll explain exactly why good grief. Whoa, look at that. I wonder, something's touching it. Something's touching it. Oh, there it is. All those X's. There is no such thing as a symbol with all those X's. How do I get rid of that? Just go like this. Delete. I love the delete button when I need it. And you go right here, highlight it. Undo. Ooh, no. All right. I'm going to get there. Delete. Let me just keep deleting. So basically what I'm looking at is in the daily chart of the S&P, the daily, I'm going to get rid of this. Is there a break coming up? Yes, there's a break coming up. This is what I'm going to do. Here's the chart that I'm looking at. Get rid of all these charts. Wow, I have charts. I thought I was cutting down on the chart. I don't think so. This is leg C in the S&P at 1473.31 yesterday. That started at leg C. It's a very tight peak A, peak B, peak C. I want to talk about that. That's really important, because the shorter your parameters to the upside, the quicker you're going to get to a D, and the quicker you're going to have a pullback. But I'm really encouraged, because I have no choice but to call this peak B if there's no new high above 13,546.37 today. And that says there's still leg C to come and leg D. But at the same time, there is tremendous resistance. Let's see if I can pull it back far enough. There's tremendous resistance at the 13,661 area. That was, 13,661, the high of the 5th of October. So that's really this area between now and the next, say, 120 points on the Dow. That's going to be very important. Is there an extension by the end of the day in leg B? Does options expiration have a sudden 200-point down move in the Dow, or do we break out? I'll talk about that in a moment, and I'd love to take your calls at 877-927-6648, and all going to that question. Where's the next 40 points? I can do the next 180 points in the Dow. I don't know about 400.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on Chinese stocks, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
with the launch of Tiger TV. TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, Steve Rhodes, Basil Chapman, Ken Shreve, David White, Larry Pesavento, Victor Jones, or Daryl Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing.
TFNN is proud to partner with Great Panther Silver for another exciting silver coin giveaway. The Great Panther Silver Super Silver Giveaway begins the week of January 28th, and we'll be choosing 47 lucky winners. It's free to enter with absolutely no strings attached. Just visit the front page of TFNN.com today to fill out your entry form. Every hour that we're on the air, 9 a.m. to 6 p.m. the week of January 28th, we'll be randomly choosing one lucky winner that will win a silver coin or bar from Great Panther Silver and TFNN. And the final hour of the week, Friday, February 1st, we'll choose 3 lucky winners. That's 47 winners in just 1 week, with over $1,000 in silver given away to our loyal listeners. Register today by visiting the front page of TFNN.com. And for more information on Great Panther Silver, you can click on their banner on the front page of TFNN.com, or check them out on the NYSE Amex symbol GPL, or on the Toronto Stock Exchange symbol GPR.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Wealth Management. Simply picking the right stocks is not enough. Research has shown that choosing the right proportions of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley believes a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what an asset allocation and a Morgan Stanley Wealth Management financial advisor can do for you. Call Angela O'Brien, First Vice President and Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Wealth Management, LLC. Member SIPC.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi, folks. Basil Chapman. So let's just quickly do this. And I've got a couple of questions then that I want to answer other questions as well. First of all, in the S&P, this is what I'm really talking about. The S&P today needs to clear the high of yesterday, 1470. I'm so impressed. I mean, you know, I've spoken about this phenomenon so many times. I remember in 2004 walking along the beach in Clearwater. There was this big conference that we were at for the Tiger conference we always had. And we had finished up, and I just needed a break, and I was walking along this beautiful beach at Clearwater in front of the hotel. And I'm walking along, and I remember it's like 4 o'clock, then 4:05, and I look at my watch, and then suddenly I say to myself, oh my God, I got an interview coming up. And I ran back to, I don't know if we had cell phones in those. Anyway, I ran back to the hotel, and I called in to TFNN for my interview. And I spoke to Tom about this pattern that I was looking at, which was the Stork Lake Formation. And that went into January of 2005. It was really just a beautiful. And periodically it's come about, not every year, but many years has been this pattern of intense buying. And the VIX down in the 13.21 area is saying there is intense buying. I believe the public's coming in. So what I wanted to say is, impressive so far. Day is young. Who knows what the heck's going to happen? Well, some of us think that we know, but we don't really know. 1473.31 was the high yesterday. We were only 17 cents or 18 cents away from making a new recovery high. I want this legs. It's not listening to me, of course. I'm just saying hypothetically, I would want to see this leg C continue higher, much higher. Because if it just stops here, and in fact, if it doesn't make the new high today, and then there's just a tiny little leg D, it in fact could be overwhelmed because the NASDAQ is not that powerful, and there are a lot of NASDAQ stocks that are starting to turn down. In fact, we've got when I'm looking at the stock, and I'll show you that NQ in the trading range can last a while. So this is very important for me. The 120-minute chart, I haven't finished it. ABC, this is D. The 120-minute chart is holding, but the technicals have pulled back. You need to see it push much higher. So that's very important. I'll do the SPY to see, because sometimes the SPY leads a little bit. Aha! Just as well I did the SPY. The high yesterday is 147.21. The high today is 147.18. 3 cents. It's about the same thing. So it needs to climb above it. It's walking the 9-period moving average after such a huge gap, a very unusual gap historically speaking. You would expect a pullback. This is bullish because the stochastic's at 98% and the MACD's at 48%. That's why. And here's the other thing: we're into the phase. I just know. I've seen no statistic. My gut is just telling me. Sometimes the gut, we talk about the gut, but the gut happens to be part of the mind. It happens to be, I don't think the gut has a mind of its own. Anyway, sometimes maybe it does. So that my gut is telling me the public are coming in. I just feel it. I can see it in a particular stock today that's telling me that. The stock that we had shorted yesterday, almost within cents of the high. We've shorted it twice before, lost a little money. We've had a huge profit in it once before. Also on earnings news, which I didn't even remember, but just that was a coincidence because we were short. Yesterday was also a coincidence. I completely forgot about the earnings coming out this morning. And it dropped. It gave us a 22-point profit. And this is part of the character of the oldies they're done. The Apples, the AZOs, the maybe even Panera Bread or the Biogen IDEX. I think they are having a terrible time, but you're seeing folks come in. I watched it myself. After I spoke with Tom yesterday about our stock that we had just entered, we can have stocks in the 3, 4, 500 area. I can also put in stocks that are $1.37, which is what we bought the other day, and it popped. It popped up to 151. In just a couple of days, and I was speaking to Tom, and it must have gone, Tom must be, TFNM must be everywhere, because overnight there was huge buying, 20, 30, 40,000 shares, and it popped up to 157, trading at 156. So I suspect people are coming in, and they're going for these we got a number of low-price stocks, which are doing really well in the teens, or in the single digits, and that is really important to look at the market and say what's happening. So to answer the question, I don't think we need to go into the very, very pricey big caps at this particular point, unless you're looking for something that you think has sustainability to just keep going for quite a while longer, because I believe that we're building up momentum to try the S&P to test those highs. It doesn't have to get there, but that's what I'm looking at. The volatility index at this low is telling me be real careful. So we've got a break coming up. I wanted to do a couple of stocks. One was, if I can find the name right there, Enoch, which was mentioned in the den yesterday, which had a spectacular move. And the other one is going to be GWRE, Guidewire. And look at these two stocks. These are low-price stocks. Well, fairly low price. Guidewire is much higher. I'll be right back. 877-927-6648.
If you're an investor looking for a great weekly investment newsletter, then now is the perfect time to try out Ken Shreve's Ultimate Growth Stocks. Every Tuesday, Ken breaks down multiple sectors in his weekly newsletter, Ultimate Growth Stocks, with a full in-depth report including specific trading recommendations within his model portfolio, charts, sector analysis, upcoming economic data, along with intra-week trading updates on newsletter positions whenever the market dictates. Right now, you can receive a full month, that's 30 days, to evaluate Ken's newsletter free of charge to see if it fits your trading plan. At less than $75 per month, Ken provides you with his expert trading advice that can pay for itself in no time. Take advantage of this great offer by signing up for a 30-day free trial to Ken Shreve's Ultimate Growth Stocks today. Don't let this offer pass you by. Visit the front page of TFNN.com and sign up now. Just recently, on December 28th, Market Insight subscribers were advised to go long the QQQ, the NASDAQ 100 ETF, on December 28th at $63.91, and only 2 trading days later, after a huge jump in the markets, Market Insight subscribers were advised to sell the QQQ at $66.64 for a $2.73 or 4.27% profit to start off 2013. At the same time, Tom O'Brien had advised his clients looking for a more leveraged trade that they could have initiated a position in the QLD, the ProShares Ultra QQQ ETF, and over the same 2 trading days, Market Insight subscribers were able to lock in a $4.48 profit or an 8.47% gain in just 1 trade. Get your 2-week free trial to Market Insights today by visiting the front page of TFNN.com. Cancel at any time during your free trial and pay nothing. Don't miss out on the next great trading opportunity in 2013. Act today. Has the current market volatility continued to stop you out of trades when the market spikes against you? Now is the perfect time to open up an account with Nadex. Nadex, the North American Derivatives Exchange, is a brand new, completely regulated Chicago-based exchange, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their completely free trading platform, which also features real-time charts and full customization capability. One of the advantages of trading with Nadex in volatile markets is that your risk is always capped and you have the ability of keeping your trades open even when the market spikes against you. Nadex is completely brand new with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com. Or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors. Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
This segment is brought to you by Harmony Gold. For more information, just click the Harmony Gold banner on the front page of TFNN.com.
Hi, folks. We're back and just having a little conversation with my engineer. You want to know, did I run back to the hotel in my swimming trunks? And I had to say, I did. I mean, I was just having this quiet catch. It was just so beautiful and peaceful. Long walk. So, okay, and I can't remember the name of the hotel. We were there so often. Anyway, so here we go. We're looking at the guide wire, which is in leg D in the daily. Just a fabulous move up. But this is an IPO. It IPO'd back in January of 2012. Opens at 1670, made a low of 1645, and it ran in 3 months all the way to 38.13. Then it pulls back, and now it's really started its move at 22.40 was the low in June of last year. I'm calling that leg A to be conservative because the real low was there. I normally would put a plus sign there and start that, but this is going to be conservative. I call it a gray A. Why? Because it's underneath the last major high. So this is what I call a retracement rally failure mode, even though that's just an explanation. It doesn't say it's negative. It just says it's retracing that failure that it made. It's trying to get back. But if it can get into that candle that inverts, not really a Roman candle, but if it can get into the 34.40 area in the next week or two, I'd say preferably the next week, that's going to say, wow, this thing could really climb all the way to the upper part of the 38.13 top. That's number one. Number two is the weekly chart Let me see if I've done this correctly. Yeah, the weekly chart had a spectacular peak A to B, and now it's really started its move. This holds the 200-period moving average. I love these particular moving averages. Holding the 9-period moving average, wiggle around it, and now it's in leg C to the upside, still very early in the move. So here you are. You're looking at peak D and possibly in the daily, so pullback. I would say 30. If you're in it, fabulous. But if you want to look at maybe getting into 31.90 to 31.50, makes a little base around that area and then starts to break out, that's the time that you want to look at it as potentially going even higher. And the other one was Enoch, E-N-O-C, which I'll never remember what the name of this is. Enernoc must be an energy company, Inc. This is a huge leg C that it had just the other day in December, a month ago. It was at 10.69, and it has a spectacular move yesterday that goes from a low of 12.52 to a high of 15.89. Now it's making possible peak C. Technicals are very good. I suspect it's going to make a leg D at 15.90 plus. And then that's leg D. And then you've got to be careful. Why? Because 16.73 would be the upside target on this. And that's the 200-period moving average. But it could start to get really choppy. And I'm not sure just why it broke out like that. Oh, I've never finished this. This is peak A, B, C. So that's a rounding top failure. But it didn't take out 4.80 was the low in November of 2008. And 5.41 was the higher low. So this is actually good. One oak. Oh, pronounced one oak? Okay, good. One oak. But wait, we've got that other stock that George from New York talks about, which is one oak. What was that? OKE? Anyway, all right. So here we are. So I've done those things. Now, what I also wanted to do was, to me, this is going to be a sign of what we could be looking at. And if you look at the IBD, I don't know if I even did that yesterday. I think I spoke about it, but I never got to it. 3Ds. Did I talk about that? Yeah, I spoke about the 3D, because I went to see The Life of Pi, which is really fascinating, really interesting. So, okay, this I've got is a potential leg A to the upside right now. This is one of the great stocks now. It's like new leadership. You know, Ken's giving a course. Ken Shreve is giving a course tomorrow night, I believe it is. For those of you who have signed up for his newsletter, great newsletter. And he does fabulous work on the Investors Business Daily type, not necessarily always Investor Business Daily, but that type of the patterns that he's learned over the years through working with them and studying with them. So if you look at the way the 9-period exponential moving average has worked in the weekly chart in leg D, I would say it's starting to get a little bit toppy here. A little bit toppy. Look at the monthly. It's parabolic like a rocket ship. 3D systems, manufacturers and prints 3D objects. Just the whole concept is brilliant. I just love that. So what I'm looking at here is in the daily chart. It's giving me information that says there's a chance that it's really close. It's at 62.46 right now. I suspect underneath 65, it's going to make some kind of reversal. If it cracks 59 support on the downside, 59 to 58.30, that's going to say time out. It's had a fabulous move, and timeout's unfolding. I don't have the signal yet. I'm just saying that that's what's happening with this number one stock in the IBD 50. Number two is FLT, FleetCor. FleetCor Technologies provides specialized payment products and services to commercial fleets, oil companies, and petroleum markets. So look at this. This is making a D. Also, so we're getting a little toppy, a little extended here, which tells me, I don't want to go through them all, but it's telling me that there's a chance, based on my Dow chart, that we're getting fairly close to, we are within early next week. Well, I'm not going to say early next week. I think next week, at some point, I will get some kind of a signal that's going to say, okay, now we can be coming down to, now we can be coming down and testing really key support. And how we do that is going to be very, very important. One of the reasons being this bifurcated market is seeing my three bears acting very unusually. The TLT And I believe I heard Tom talking about the TLT, and he was very positive on it, just on the shorter term. Great call, Tom, because it's doing very well. Now you're looking at the TLT, which is trying to fill the gap, and the gap with a low of 120.91 was 120.70. That's going to be very important. What I say is I can see a rally in the TLT to 121.73. What happens over and above that, if in the next 2 weeks the TLT goes above 123.50, our market will be under pressure, and you'll see the volatility index start to climb. Let's go to Bob in Louisville, Kentucky. Hi, Bob. How are you?
I'm fine, Basil. How are you doing?
I'm very well. I used to have a very good friend. We were at the conservatory together. We used to sub for one another. He was a clarinetist and bass clarinetist like I was, and we used to freelance. And he went down as the bass clarinetist down in Louisville, Kentucky. And the sad thing is, he was just a fabulous musician. And then out of the blue, he just suddenly died. Young guy. It was just anyway. He died. Yeah, I came in and he played for, I think, a year or two, and then, boom, out of the blue, I found out that he had died. But from Louisville, and the orchestra, they used to have, I don't know if they still have it, but the orchestra used to do a lot of contemporary recordings. That was the orchestra, in fact, other than up in New York, where there's an orchestra that does contemporary recordings. They were the orchestra that did a great deal of first performances and recordings of American artists, composers. Very unusual. It was a tremendous orchestra. I hope it's still going strong. I know that there were problems.
I don't know. I know they were, but they had some financial problems.
They had terrible financial problems, yeah. In fact, I could probably look it up. I've got the union, the Musicians Union magazine somewhere right over here. No, too many things on my desk. Anyway, you'd like to know about what?
Silver. The SLV, I heard you earlier say that you felt gold was in a bear market.
Yep.
Yet silver seems to be moving, and the dollar, who knows what that's going to do. So
okay, let's talk about this. The dollar had a very nice. I don't know what happened. Oh, there was an error. I got the dollar chart beautifully, and then suddenly there was a bad tick, and the dollar went down to zero. That's what I've got right here. No, it went down to 0.08. I'm sorry. So let's go back to the SLV. What I would do is this, and I was talking with Ari, who often calls us. Ari talks about the gold and silver a lot. What I said is that I anticipate that there's a pattern that I talk about very often. I'm sure you've heard that it's an H pattern, lowercase h that can become an M pattern, lowercase m. So it's got these arching formations. And what I said is I believe that silver could rally, what I would call a counter-trend rally, because the monthly chart for me is still pretty negative. The SLV, which is the iShares Silver Trust, trading at 30.39, up 3 cents, would actually have to climb above 34.40, which shouldn't be too much, but it's about 12% higher. If it's really not in I don't want to. Let's call it the bear phase, because it made a major high at 45. What was that? 48.35 back in April of 2011, a peak D in the ChapmanWave, and it pulled back to 25. That's a pretty big consolidation. So what I'm looking at is, I suspect that silver could have a little bit further of a bounce here, but everything about my chart says that it should go down and test the 2652 area, which is the 200-period moving average, between 2750 and 2652 over the coming 4 to 6 weeks. In between, it could have a bounce, which it's doing right now. Do you have a position at all?
Yes, I have the small position in the DSL, and I've got a sell order in, I mean a stop order. So I don't want to take too much more of a beating, but I still think, like you, that silver's going to pull back to that number. So you're now short?
Yes. Okay. And is your position underwater right now?
Yes, a little bit.
A little bit. Okay. You see, what I would say to you is this. I can see this is peak leg C or maybe peak C today, a very quick peak, A to B to C, and the MACD is rising. Oh, I don't know what I did here. I lost something. I lost my stochastic. I don't know where it is. All right, I'll have to check on that. And so it's rising, and there could be a push above 30.56 for leg D. it's at that point that I'm going to get a lot of information, because if I'm starting to run out of upside energy in the markets with a potential, just a potential, at least maybe a short-term top coming in the general market early, sometime next week, that could make the dollar stronger, and then we might see gold pull back and silver. But if this is a counter-trend rally that's going to have some further strength, I would say to you, now I know that the 200%ers are the ones that are, they move, when they do move, they move pretty quickly, and it can go heavily for you or heavily against you. But the candle that I'd be looking at with 31.36 as a high in the SLV, the high of the 18th, to me, that entire candle should become the resistance for this particular move. So it's my suspicion right now, based on everything I'm looking at, that yes, there's a counter-trend rally, and I'm just double-check on the lows. I should 28.65. Let me just type that in so I don't forget it. 28.65 was the low of, that was the 20th of December, and 28.61. Aha! I thought it was that. 28.61. This is okay. This is very interesting. Because silver, the SLV made a lower low but didn't close under it on the 4th of April, theoretically in my work you can have a rally, but that rally should not close above the previous arch high. It should not close significantly. It can pop above it, but it shouldn't close above it. So the level I'm looking at is 30.47. We're at 30.40 right now, and yesterday's high was 30.56, and it closed at 30.36. My suggestion is this, that would you be prepared either to keep your stop in, or to maybe lighten up on the trade and be ready to put that part that you lightened up back in later? Because
that would make sense to me, yes.
Because that's what I would recommend. Everything about it says on the shorter term, even the 120-minute, I know, I looked at it last night. The 120-minute says that the 200-period moving average at about 30.62 is going to be quite strong. So, and that 32.62 would allow it to go over the high of the 15th. So we are real close. I thought it through. In your position, if silver pushes above 30, this is the SLV, about 30.70, you've got to be careful, because the bar that I'd be looking at is the bar of the 18th, and that gives you another 60 to 70 cents on the upside. So that's a lot of heat to take. I don't want to get you out of a position that I personally think, like you, looking out, can go down further. So my suggestion is, I don't want to give you the percentage. This is something that you will personally know. You'll just know from your own experience. I would lighten up a little bit on my short side here. I'd put that money aside, saying, okay, that's money that's going to be rededicated to the short side. I'd wait for leg D. If you are free, give me a call tomorrow, which is Thursday, and that will be a good day to do it. Let's see if it's broken above 30.56. I'm going to have a much better feeling for how leg D will come in and where it should go based on the close today. So that's my recommendation. You don't have to, but I would think about taking something off, and that's something that I would dedicate to put back on there. But just to be careful in case overnight there's a sudden spike in silver and you get that leg D to the upside. So that's my recommendation. And then we can talk about it in terms of, there's always going to be an opportunity to put it on for the short side. That's my feeling. So I don't want you to take too much of a risk. So I hope that helps you.
I sure does, Basil. Thanks a million.
Thank you, Bob, for calling.
Thank you. Bye-bye.
Thank you. And folks, we've got a break coming up, 8779.
Recently, Basil Chapman has had some outstanding trades in his newsletter, The Opening Call. Each morning by 9 a.m., Basil uploads his newsletter to the TFNN servers so that his subscribers can access his expert trading advice. Basil gives his take on the direction of key indices and updates any active trades that his subscribers are currently in. Just recently, Basil subscribers closed out a short position in Chipotle Mexican Grill, CMG, for more than an $86 profit per share, over a 20% gain in just one position. If you'd like to try out Basil Chapman's newsletter, The Opening Call, then visit the front page of TFNN.com and click Trading Newsletters. There you'll find Basil's newsletter, The Opening Call, where you can request a free sample copy. Also, don't miss Basil's program, The Tiger Technicians Hour, Monday through Friday, 11 a.m. Eastern, on TFNN.
Tom O'Brien's weekly newsletter, The Gold Report, has helped subscribers for over 10 years navigate the high-risk world of exploring and producing gold companies. And now's a great time to sign up for a free month-long trial to see the kind of insight that Tom delivers for his subscribers on a weekly basis. Every Monday, Tom O'Brien issues a quick update on the metal market, giving you his take on the HUI, XAU, GLD, dollar, bonds, and much more. Tom follows Monday's update with a full gold report, which is delivered to subscribers Tuesday afternoon with detailed coverage of 24 separate gold or metal stocks, as well as another 10 to 15 stocks that he lets you know are on his potential watch list. Get your month-long free trial to the Gold Report today by visiting the front page of TFNN.com. Don't spend another year navigating the metal markets on your own. Act early in 2013 and make the most of your gold and metal market investments. David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
Let me tell you something, folks. I have people coming up to me saying, I just can't believe the amount of work that Steve does on his newsletter. And I says, I absolutely agree.
That is a recent clip from the Money Masters show that Tom and I do each day at TFNN. My newsletter service, Mastering Probability, is much, much more than a newsletter. Yes, it's outperformed the S&P 500 by 100% during the last 15 months. But more importantly, it's an extraordinary education, a roadmap for your success. And it's yours risk-free for the next 30 days. Just go to the homepage of TFNN.com and click on my name, Steve Rhodes, and then Mastering Probability, because everyone needs a success strategy. For most, it's a competitive edge, the will to win, the drive to overcome any obstacle. Whatever you call it, winners find a way. Find your way to Mastering Probability today, because your journey to extraordinary rewards is just one click away.
This segment is brought to you by BackTech Environmental. For more information, just click the BackTech banner on the front page of TFNN.com.
Hi, folks. Basil Chapman. We are back. Dow's down 25. S&P has just gone positive by 2 cents. Wow. I mean, yeah. That's amazing. So the question I had from an email was, just wanted to let you know I enjoy the selection of music that gets played as intro before the Chapman Hour. What was the instrumental played after Sinatra's Love and Marriage on January the 16th morning? Thanks from one of our wonderful Tigers out in San Jose, California. The song was by Raymond Lefebvre, and the song was Soul Coaxing. Thank you, Al, my wonderful engineer. So there we are. We do requests. We do all sorts of things right here, love and marriage. So let's look at this. So the GLD is the one that is really a benchmark for me, because the H pattern that is forming as an M pattern in the monthly chart, and the MACD is still very negative, and stochastic is not that good at 56%, says there's just a greater chance that the 174.07 level won't be hit. Rather, on the downside, this is 162.69. Rather, the 154 55, 54 area will be hit quicker. And if it is, then immediately 148, the whole 148 that's been support is going to be taken out, and I suspect we go to 147, 145 very quickly if that happens. But that's what the chart is saying. I have to also say that after a peak F, having held this well, that is quite impressive. F for the sixth highest peak in the Chapman wave. And if you look at the cup formations, two cup formations that have occurred since the 185 high in the GLD, back on the week of the 9th of September of 2011, this one is a shallower one. What's going to be needed is a sudden downside projection as it takes out the low of 158, let's sort of 157.50. So the moment you got 5 points to the downside on the GLD, then I'm getting confirmation that the stochastic hasn't got the power to swing as it has, trying to right here. Every other swing, yeah, look at this. I give a little lesson. Look at the way the slow stochastic right here. Every time it's gone into the under 20% area, right on 20%, under 20%, under 20%. There's been a spectacular move to the upside. It did take a long time from 148.53 back in the week of June the 1st of 2012. For a couple of months, it was just stuck, and then it finally broke out and went to a modest high of 174.04, was it? 174.07. And that was the week of 5th of October of last year. So the 9-period exponential moving average, this black line right there, that is tremendous resistance at this particular point. If on Friday at 4 o'clock the GLD closes anywhere into the 164.16 area, it's at 162.72 right now, and then I'm going to say, whoa, maybe once again the slow stochastic is going to go from the teens into the 20s, and that'll be a positive. I think this is terrible action, considering how the stochastic has rallied, and the price just hasn't been able so far to go above the 9-period moving average. So that's the way I'm looking at it. Now, I wanted to just go through a couple of things here that are important. Folks, go to the front page of TFNN. There's a lot going on. There's the silver, the great giveaway in the silver. There's Ken Shrew's webinar tomorrow night. There are newsletters. There's just a whole bunch of things. My service is the opening call. We have 4 long positions, which are doing really well. One is up, even today, it's up 3%. And we had one short position, which we bought yesterday, which made us $22 overnight. Thank you very much. We'll be back again on the short side for this. We got out, it's now trading way, way higher than where we got out. So please consider it my opening call. I'd love to have you as a subscriber. And please stay tuned for Larry Pesavento today. Welcome back, Larry. We missed you on Monday. Love to have Larry back. And all the other programs on TFNN this afternoon. I'll be back tomorrow morning. Thank you for being here.